Hey everyone, it's Daphne from Newbie, and today I'm going to be breaking down one of the most requested topics on my channel, and that's how to buy non-performing second mortgages directly from hedge funds without brokers, middlemen, or overpriced retail notes. If you've ever wondered where are investors getting these deals before they hit the tape? This video is for you. Before we dive in, make sure you hit like, subscribe, and turn on the notification so you don't miss any of my note investing videos. All right, so let's get into it. Um, First, why buy mortgage notes directly from hedge funds? All right, when you buy notes from hedge funds directly, you're going to get better pricing, okay, because there's no broker markup. You'll get cleaner tapes, more accurate information, and opportunities to buy again and again and again. All right. Most new investors don't even realize this. Hedge funds actually want small buyers. Okay. They want people who can take one-offs, cherry picks, and small pools so that they can move through inventory much faster. So don't think you're too small because you're absolutely not. The next thing is, where to find hedge funds that sell second mortgages. You won't find these funds by Googling buy notes. Okay, those are aggregators, basically. Here's where the real sellers come from. Industry conferences. All right, events like Note Expo, which is one of the largest conferences for mortgage note investors in the country. I am in conferences, paper source, uh, and distressed asset meetup groups. Okay, because they have those out there. These events are full of hedge fund representatives who actually are moving inventory. Okay, the next place that you would find sellers would be LinkedIn outreach. Okay, you're going to want to search for titles like asset manager, portfolio manager, secondary market director, okay, and distressed debt manager. Okay, so, and you want to message these individuals professionally, and you'll be surprised with how many actually respond. Um, the third way that I want to bring up is just, warm introductions, right? If anyone that you have already connected with in the note space, maybe an online forum, or you attended a online training or seminar of some sort. If you know someone who already buys from a fund, then just ask for an introduction. Okay, so this is going to be the absolute fastest way to get approved if you actually know someone who's already doing business with this fund. So now, how to introduce yourself professionally. Now, this is like super, super important. All right, here's what not to say. First, you don't want to say, I'm new, I don't know what I'm doing, can you help me? No. Okay. The second thing, can I have your tape? Absolutely not. Very unprofessional. You do not want to say that. The third thing is you don't ever want to say, I'm just looking for cheap notes. Okay, no. Here's what will get you approved. All right. You want to introduce yourself and say who you are. Okay, let the person know who you are, what you invest in, and don't give them the your full scale due diligence criteria, okay? Because that's not what anybody is looking for. They are looking for at a high level what you invest in, performing, non-performing, first, seconds, commercial, residential. Okay, and if you have particular states or if you want to look at notes available nationwide. Okay, those are basically the four things that you want to provide them with when you communicate what you invest in. Okay, the other thing you want to tell them is how many deals you've already closed, even if it's just one deal. All right. You want to tell them how many deals you've actually closed, not how many deals where you've completely worked out the loan, and all of that, but how many deals you've closed with other uh, note sellers. Okay. The other thing that you want to communicate is your buying capacity. All right. How much capital you have to deploy for your note investments. Is that 10,000? Is it 50,000? Is it 100,000? How often do you plan to purchase? Okay, so that's important as well. And then your timeline. When are you looking to purchase? Are you looking to purchase in the first quarter? Are you looking to purchase it within the next 6 months? So you want to let them know what your timeline is. So those are the things you want to say to get approved. Who you are, what you invest in, how many deals you've closed, and your buying capacity and your timeline. All right. I hope I'm clear on that. So here's a sample email, and I'm also going to put this in the description as well. But the sample email is, hi, my name is Daphne Wilson, and I'm an investor focused on non-performing second mortgages. I typically buy one-off notes and small pools under $50,000. I'm looking to establish direct relationships with sellers for ongoing purchases. Okay, so you want to make sure they know that you're looking to establish a relationship. Okay, and then ask, do you have an approved buyer process or current availability? Okay, short, simple, credible. Okay, that's what we're going for. Now, let's talk about what you need before they send you an actual tape. Most funds are not going to just hand you over a tape, okay? They're going to ask you for a signed non-disclosure agreement, an NDA, okay? Also a signed NCND, which is a non-circumvent non-disclosure. Okay, so don't be surprised if you get, requested to sign those two documents. They'll also ask you for a basic buyer's profile, okay, and proof of funds. Now, for investors that buy directly from banks, banks rarely ask for proof of funds, but hedge funds sometimes do. So it's not a guarantee that they're going to ask for it, but sometimes they will ask for it. And once that's done, then they'll start sending you quarterly or monthly tapes, however often they send out inventory. All right. Now, what to request when you're reviewing notes. Okay, so once the hedge fund starts to send you inventory, then you want to know what to request. All right. So when a hedge fund sends you a tape of notes, you want to always ask for a collateral file checklist. That's a listing of all the documents in the collateral file. Uh, Payment history, which typically comes from the loan servicing company. The last known payment amount and the date of the last payment that was made. An estimate of the property value, bankruptcy status, and if the loan is currently parked with a servicing company. Okay. Now, Remember, non-performing seconds are not all the same. They're not. Some are newly defaulted. Okay, maybe they're 4 months behind. Okay, or 3 months behind. Some could be 10 years behind in payments and anywhere in between. Okay, some have been charged off by the bank. Okay, so all of these are different, scenarios, if you will, for non-performing seconds. So your due diligence is going to help you determine if you're buying a headache or if you're about to hit a home run. Okay. So these are things that you absolutely want to know. So let's talk about how pricing works for non-performing second mortgages. Okay. So most hedge funds price non-performing loans, seconds specifically based on the unpaid principal balance. That's the UPB, unpaid principal balance. That's the amount that the homeowner has remaining on the loan, the principal. Okay. Um, the pricing is also could also be based on collectability, the equity position of the property, the borrower behavior. Okay. By borrower behavior, I mean borrowers that, there's some people that habitually pay their mortgage late, or they may be a serial bankruptcy filer. So every so many years, they file bankruptcy and bump off a whole lot of debt and start over again. The other thing is, their credit behavior. Are they paying down debts? Are they, trying to get new credit cards and new debt? So you're looking at the borrower's behavior and then bankruptcy status, whether they're in a bankruptcy or not. If they are in a bankruptcy, is that a Chapter 13? Is it a Chapter 7? So on and so forth. So the typical price ranges for non-performing seconds, when you're buying directly from a hedge fund, it's going to be 5 to 25 cents on the dollar for non-performing. Okay, it'll be 30 to 60 cents approximately on the dollar for performing notes or notes that have already been modified. There's a modification that was done on the note. Okay. And of course, the homeowner is honoring that new payment agreement and is actively making payments. Okay, so it's still considered a performing loan, but it's performing under new terms and not the original terms. Okay. Um, and higher, actually, in some cases, if the loan is already in a Chapter 13 and is being paid every single month by the bankruptcy trustee. Okay, so that's also considered performing because it's paying through the bankruptcy court. The homeowner has filed bankruptcy and they are sending in a payment to the bankruptcy administrator, and that bankruptcy administrator is taking that payment and divvying it out to all of the creditors every month. Okay. So your job is to buy based on the borrower's likelihood of resuming payments. Okay. So now, how to negotiate without damaging the relationship, right? You don't want to, first of all, you don't want to be that lowball investor, where you do your due diligence. It's a great looking note. The note seller is offering a fair price for the note, but then you decide, well, I'm just going to ask for a discount just to see if they'll give me one. That's not a good move, okay? And it damages your reputation as a note investor. There is such a small community of us mortgage note investors until after a couple of years and going to the conferences, it's very easy to know who the players are and who've been in this space for a long period of time and who has a good reputation of being a good buyer or seller and who has a not so good reputation. Okay, because that information gets out there very quickly, especially considering, this is such a small niche in real estate finance. Okay, so when you're buying a note, you don't just want to um, lowball the seller because they're not going to take you seriously. And then when you go to buy another note, they're probably not even going to open your email. Okay, so you don't want to do that, but you do want to be able to negotiate. So when negotiating, particularly with hedge funds, you want to be fast. Okay, you don't want to wait a week to respond. Okay, you want to be fast, you want to get back to them right away. You want to also be decisive. You want to know what your note investment criteria is, and then you want to apply that to the notes that are for sale. Okay. And so you want to be able to look at it and make a decision right away on whether or not a particular note is in your buy box. Now, the other thing is don't retrade unless the issue is major. Okay. So I could go into a whole separate um, a whole separate video on that, but I'm not going to do that. Let me turn this phone off. I'm not going to do that. But you just want to make sure that you're not needlessly going back and forth unless something is really seriously of major concern with the note. And the last thing is, the ability to close the deal on time. Don't drag the deal out. It can take just 1 or 2 weeks to buy a mortgage note. Okay, not 30, 40 days. Okay, absolutely not. If you build a reputation as someone who closes quickly, they're going to give you first look at the best deals. And that's where, the real money is, the best deals. Okay, so the less you can pay for a mortgage note, the more upside there is. Okay, so final steps before you close the deal with the hedge fund. Okay, before wiring any money at all, you want to, one, verify the collateral. You want to make sure that you have all the documents that you need and that the appropriate documents are originals, okay, and not photocopies. Now, there are some documents, you may be able to accept a photocopy of, but some you cannot. So you want to verify your collateral, make sure everything is intact. After all, we are buying paper. We're not buying the property. So we have to make sure that the collateral is in order. All right. Then you want to confirm the payoff amount. You want to review the title. Okay, so if you know that these are, you have a note or multiple notes that you want to move forward with, I would suggest getting a second mortgage lien search at the very least to make sure that the title is clear. All right. Ensure loan servicer onboarding steps are clear. Okay, that's the next thing. So if the loan is already parked with the servicing company, um, then that's great. It's already boarded. You can, if you choose, leave it with that servicing company, or you can transfer to another servicing company, but you just want to make sure that you know the proper steps directly from that loan servicer in order to board your loan. Okay. And last but not least, get your assignment of mortgage prepared. So there should be an assignment. When you purchase the mortgage from the hedge fund, you should receive an assignment of mortgage that has been notarized, and that document needs to be filed with the county recorder of deeds. Okay, so those are going to be the final steps. Um, let's see, and actually, you want the assignment of mortgage prepared. You also want to make sure that you research the chain of assignments as well, and that the assignment chain is not broken. So if the loan, that means simply that if the mortgage has been sold multiple times to multiple lenders or investors, that there's an assignment for each time that mortgage note changed hands. Okay, so you want to make sure that that is intact. Once the wire hits and the assignment is recorded, that note is yours. Okay, and you can move forward. All right, so to wrap this up, this video ended up being a little longer than I had anticipated, but buying directly from hedge funds is not complicated. Once you know the process and you have a set process in place and you're prepared, and once you get in, then you're able to buy notes for half the price that retail investors are paying. Okay, so if you're serious about doing deals like these, keep watching my channel. Join my free class at newbie.com. Take the free course so that you learn how mortgage note investing actually works. Okay, um, and that's it. Thanks for watching. If you learned something today, hit like, subscribe to the channel. Drop your questions below. I personally respond to as many as I possibly can. And I look forward to seeing you in the next video.